direction, you could be making the wrong choice or going back and forth for like 2 years or 3 years of your journey. Now imagine if on day 6, someone's like, bro, you got to hold your trades. If you keep taking these big losses, but you're not holding your trades, you'll never make money. And it clicks. It only took you 7 days and a good mentor to tell you this piece of information that could have put you on a cycle for 3 years where you hold your trades, and they keep reversing on you, and you get frustrated and you're like, okay, I'm going to go start closing early. And you go start closing early, but then the losers outpace your wins. And you're in this cycle of frustration thinking there's no way to win, when really a mentor could have just told you the answer and you have been able to move forward. You guys understand that difference? So when we talk about mentorship, we're not just talking about learning information. Everybody fucking knows what support and resistance is. You don't need another person, another adult to tell you a floor and a ceiling, unless you're just starting out. But when you get advanced in your trading, it's more so just decision making. And the decision making is really about like, it's regret minimization. I guess it's like a complicated way to say it, which is like, here's how I think about trading. This is where I feel like most beginners have trading completely wrong. Everybody thinks that trading is an opportunity for you to make money. Like they think that the markets exist for them to make money. Who here in the chat thinks that the markets exist for us to make money? Like really let me know. Who here thinks that, yeah, of course, like markets exist because everyone wants to make money. And so it's a chance for us to make money. Oh, this is looking good. Good morning, everybody. If you guys are tuning in from Zoom and you're a ChartAddicts member, it's great to see you guys on here. If you guys are tuning in on YouTube, it's also great to see you guys. What we're going to go and do right now is go through the main pair that I'm watching, which is NAS 100. And I'm going to go through all the rest of the pairs for you guys, so you at least have the levels to trade for the day. If you're not interested in trading Nasdaq, you can at least have the levels I'm watching for the rest of those pairs. Nasdaq is pretty straightforward. We're on a very aggressive bearish trend. But what I'm seeing now is the market's starting to consolidate. Whenever the market consolidates, my immediate thought is trade the range, because you guys see we have a beautiful low and high right here. If we had just bought and sold, maybe we didn't buy here. There's a little bit too risky, but maybe we shorted here, went long here, shorted again yesterday. I got smashed yesterday on my stop losses. They completely decimated my stops. Luckily, I was actually on the charts at the time, and I was able to re-enter a short position. But the first sell that we all took together, I went into immediate profit, about 400 pips, closed partial profits. I didn't move my stop loss to break even. The market came back to the entry. I entered more positions. I came back and my stop losses had gotten hit because of that giant spike that happened at the news. What I ended up doing is re-entering positions as it closed back below resistance. And then I basically milked half of this candle and made back the money on the losses from the stop loss. So trading the range, my biggest thing when I'm looking to trade consolidating markets. However, we also see a triple bottom rejection. Triple bottom rejections means we could retrace a little bit higher before we drop. So my two options is we either short at 14,500, right? Previous resistance area, we look left. Previous support could potentially turn into resistance. The second zone is, and I might have to go on the daily for this one. Previous sell zone, kind of price likes to dance around it, kind of dip below and above. We have a selling zone right here, and price could potentially come back to retest the 15,000 psychological level before we have a nice short for 5,000 pips. So what I'm looking for is a retrace. We're retracing up right now. So we're either going to hit this first sell zone at 14,500 and reject. So I'm going to take a sell position here, catch a little bit of the move my stop loss to break even. If I get hit, then I'm going to re-enter at a higher price. So I'm looking for shorts, but today the market's in a retest kind of mood. And so we're going to allow it to retest before we just jump into sells. Does that make sense to everybody? Everyone's always like, Roy, you said buy, but you also said sell. I want to be very clear that I'm always describing the bigger picture, and then I go down and describe what we're going to do on the smaller timeframes. The bigger picture is the market's bearish, and so we're looking to short. On the smaller time frame, the market is creating a triple bottom support, and we're consolidating. So I like to play the smaller time frames, and then if the market does break out, I can always keep in mind the bigger picture and just trade along with the bigger picture. A lot of folks, they'll have a smaller time frame idea, and they'll keep trying to force the smaller time frame idea. So for example, if I short here, the market spikes up and then starts to create new highs right here. I'm not just going to keep shorting. You see what I'm saying? I'm not going to keep forcing the bias if there's no confirmation for it. What I'll do is I'll go up to the higher time frame and say, okay, if we close above here, I'll look to short at the next zone. So that's kind of how I'm looking to play Nasdaq today. I'm going to take my first chance at 14,415, and I'm going to take my second chance at 15,000 if we make it up here. Okay, if you guys want to win, just mark off these levels on your chart and thank me later. Mark off these prices on your chart and thank me later. So SPX is pretty straightforward. I'm expecting a retracement back up. So we already started to form support here at the daily. Price was moving on a bullish trend line, and then we had a breakout. What I really wanted to see was a retest of the trend line. I've been a big fan of retest of trend lines. Like you see, especially on the indices, they'll have a trend going one way. They'll break out, have a huge liquidity drop, grab the previous lows, retrace back up to retest the outside of the trend line, and then come crashing down. So here's the really interesting thing that we see. From top to bottom, if we measure it with a Fibonacci, the 78 and the 71 are sitting right here on the outside of the trend line. So ideally, we get a push up. Like it could just get stalled at the 50% because we look left, guys. Always look left. Huge selling zone here. So that's the first selling opportunity is 45.50. We've been talking about this since Sunday. I've been saying the same price since Sunday. Have not changed my bias. But if we break through, I do want to see a touch on the outside of the trend line for a big sell. Now, do I think we can get that big retracement? Honestly, I don't think so. So 45.50 is my base case for SPX, 45.50. Could we get stuck right here and just crash? Of course, the markets are bearish. There's sellers in the market. So we might not make it up here, but personally, I think that we're way too low to short. So I would like to see a retracement before I started shorting again. I don't want to just short at the lows of the weekly range. Alrighty. So what we're doing right now, people, we're going through levels, and then I'm going to go through and break down specific things after. Euro USD, I had this idea, no retest, no entry, never got the entry I wanted. So this is what I was describing. This is what I was just describing on SPX. Basically, nice trend, break below. What I was thinking is we can get a retest of the outside of the trend line at this previous resistance zone. This would have been the perfect trade to get a nice drop. And it might still happen. Like whenever I see a zone that's like too perfect, I never dismiss it. I always keep it on my chart. And what I tell myself is it might not have gotten hit now, but it will in the future. So what you guys, it's a good habit to keep in mind is go to your zones and extend them right. Because in the future, when the market's coming back to retest and it starts to retest as resistance, you have a very obvious place to trade. You guys see what I'm saying? So this never gave us the retest that we wanted. It made a minor correction right here and then just dropped out the sky. So no retest, no entry. That's Euro USD. What do I see from here? I just see bearish euro. I don't see any other scenario other than bearish euro for all the euro currency, all the euro pairs. I'm very bearish on the euros. If you guys do trade euro USD, what I would do is I would take this previous move and I would copy and paste it like this. And you would find a pretty accurate target because the market tends to move in identical legs down. So what I do is I do like a very, very rough kind of like, what do I see with my eyes with the bars pattern? But then what I'll do is I'll use a Fibonacci retracement to find the actual zone. So we have the negative 27 down here, and then we have the negative 61.8. So what I can do is mark off both of those levels. So essentially, we're waiting for it to come down to 1.1 psych level or 1.103, this psych level. I think 1.1 psych would be incredible. 1.1 psych, and then what do we do next? Equal size push usually means equal size correction. So we can measure the correction and then do this thing again. So just look for those obvious areas where there's multiple confirmation. That's going to be your target in the market. Once the market hits that zone, look for a retracement and trade with the direction of the trend. Alrighty, so that's Euro USD. Bitcoin, we're in a bit of a retracement. I think we're going to get up to like 42, maybe even higher. Maybe like we have like an optimism bounce, but I think that we're going to hit that 30K for sure. AUD NZD, I'm in big shorts. I'm in big shorts. Where's my phone at? I want to see if I can show you guys this. Actually, no, we'll do this later. I'm in shorts on AUD NZD. I think I barely trade currency. You guys know this. Barely trade currencies. Shout out to QB Stu. Shout out to Jason Stewart. He got my eye on this, and I've been watching it for a week. And at first, when he was looking at shorts, it was down here in this consolidation. I saw it push up. And at first, I was like, okay, now it looks good right here. We have kind of like this double top situation forming. We have a head and shoulders forming right here. For me, this is a pretty obvious sell to the downside. So I'm in sells for AUD NZD. Very rarely do I trade currencies. All right, so that's what we got in terms of pairs and in terms of trades. What I'm going to do is I'm going to let you guys put up any questions that you guys have in the chat. What I'm going to do is run and use the restroom before the market opens in 4 minutes. I'll see you guys in a few minutes, and I'll come back and read those questions, and we can go through it together. All righty? All right, we're back. We're back. We're back. All right. We're good. Now I know what you guys are thinking, right? I know what's going through your head. Roy, where did you get that sweatshirt? Now I understand, right? It looks good, especially on me. I understand that. It's an exclusive drop, specific members only. If you're a ChartAddicts member and you want one of these, if you pay for the shipping, we'll send you a set for free. All right. Now we only have, I think, 25 sets left. Let me know if you guys are interested in grabbing an exclusive piece. God, this is military grade. This is a military grade patch. This is the same kind of patches they use on a military uniform out in combat. This thing can survive the wind. This thing can survive the rain. This thing can survive the snow. This thing can survive a hurricane. Look at the stitching and detail on this, people. Look at the stitching and detail. You can't make this shit up. Every word, every letter, pristine. They said, Roy, did you really pay extra for golden threads? Yes, I did. Because we're not going to go do some bootleg, some bootleg merchandise. See, I need some CA gear. I'll get you guys right. I know a lot of folks on this call already got one of these. All right, so I'm going to give you guys my base case for NAS because before the market starts moving, I always like to at least put my base case in. I'm going to let you guys know. There's two ways I see this happening. First, dip down to the trend line, and we can buy it up at the market open, and then sell it down. Or we push up first, hit the trend line, retest, and drop. Either way, I'm seeing a break of this trend line to come back to like 13,900. But those are the zones. As long as you guys see these prices, here's what I look for. When I say look for an accurate confirmation for the trade and don't rush into it, here's what I mean. The market gets up here and it starts to break through. I do nothing. Market pushes up a little bit more. I do nothing. The market falls out the sky. I don't chase. I do nothing. The market comes back to retest my sell zone. Now I'm in this bitch, right? The retest is the most high probability trade. The sell-off confirms that sellers are back in the market and that buyers aren't going to win this game. The rejections on the retest, that confirms that sellers are going to hold the price below that zone. As long as sellers hold price below that zone, we can short it down. So it's the same thing. Like if we break through here, okay, it starts to wick, but then it snaps back and closes above here. What I can do is look for a retest for an entry. So a perfect example of what this looks like is, we're on the 1 hour here, but basically this candle, this red candle broke through my zone, this red line. But then a green candlestick came back up. And what do you notice? There was a retest. This candle right here. So the market might violate these key levels, but if it breaks above and retests, the retest is the confirmation. Let's use another example. Price violated our zone, but then it broke back above and retested. The retest was the most accurate entry, not in terms of like precision wick entry, but in terms of the highest probability to confirm that trade. So like when you guys hear me say no retest, no entry, that's basically what I mean. The first push could always be a bit of like a manipulation, but the retest is a lot more accurate for getting a direction of the trend. If we're going to go through fundamentals, 8:30 this morning, which is about an hour ago, there was a lot of good news that came out. GDP, the growth of our economy, is doing really well. So the forecast was 5% growth. We're doing close to 7%. That's really freaking good. We're dealing with some problems in the economy that can very easily be solved by growth accelerating. So if there's more growth in the economy, more jobs, more spending, more consumer spending, then that's going to get us out of the inflation problem. It's going to get us out of the market scare. It's going to get us out of the labor shortage. Growth solves all problems. So a good GDP number is honestly pretty bullish for the stock market. Everything else came out positive. The durable goods orders, less orders than people expected. And so there's a lot of manufacturers that are sitting on goods, like let's say car manufacturers, and they're not making more because they're like, we don't have that many sales, and so our inventory is supposed to cover the rest of our sales. That's not very encouraging. Unemployment claims, they hit it right on the head. This is the first time in 12 months they've got the unemployment forecast right. And I think this is complete luck because I don't know how the fuck they're even like engaging for this. So all in all, pretty good news in terms of the economy. We might see a bit of a recovery today, but ultimately the market's still bearish. All right. If we can talk about what happened yesterday with Jerome Powell. And right now I understand the market's moving. It's 9:30. The way I trade is I allow the market to open up around 10 a.m. my time, which is another 20 minutes. That's when I look for an entry for the direction of the day. So while we're on this call, if this thing comes down to retrace to this zone and we see a rejection, I'll enter a few buy positions with you guys, and then we can sit in those profits, see if we can get some good trading opportunities. Guys, there's so many fake pages. We never had fake pages for ChartAddicts. And like, thank God it was good, but now these fake pages are getting crazy. They'll tag us, they'll tag our team, they'll tag everybody. My biggest fear is that somebody like doesn't check if it's the real page and like clicks on a link by accident. That's my biggest fear. We're working with Instagram. We're trying to figure out how we can like get verified, but Instagram just doesn't want to play nice with us. Instagram is just like, oh, you guys have fake pages. Sucks. It sucks to suck. All right, we're hanging out. Ladies and gentlemen, if you haven't already grabbed your tickets to the FX Summit 2022 conference in Miami, Florida, it's an event that we are putting together. ChartAddicts is organizing this event. It's co-sponsored by Q and Top Tier Trader. We have some of the biggest names in the industry coming to speak. Professor Richard Olson, founder of Oanda and the Like Group, which is a no-fee crypto exchange that offers real-time information. Here's Q telling you guys to show up to the convention. The location is going to be in Miami. You can see a list of all the special guests that are coming. You can see a list of all the folks who are supporting the event. We got my fucking guy, James Storms, Jason Stewart, Alex, Andy Peters, Ryan Gilpin, My Life Real Quick, Nina, My Forex Journey. Nina's very excited to show up to the States. Druzy Banks, been working a lot with Druzy. Awesome guy. Really looking forward to having him. The Goldfather, Dimitri, Derek Vandelander, Derek Vandy. We just had a podcast together. Incredible conversation. If you haven't heard it, my guy from the way back, Luke Longmire. We have Charlene FX. Charlene, we just did a podcast with Charlene not too long ago. Very insightful conversation, especially for our lady traders to hear that story and her come up. If you guys haven't already grabbed your tickets, go ahead and check out the FX Summit 2022 website. If you have any questions, make sure to reach out to ChartAddicts, and we'll make sure to get you guys everything that you need. All right. While this market loads up, we have about 20 minutes until I'm about to take a trade. What I want to do is walk you guys through a very important concept that I think most people skip over in trading, because most people aren't actually trading. They're more so gambling. All right. So let's go through gambling while this market sets up. Not all gamblers are. This is such an important concept. I really want to make sure I get this right. Not all gamblers are reckless. Okay. This is a concept that I actually don't think a lot of people in our industry understand. The ones who are programming AIs, the ones who are programming algos to trade for their strategy, the ones who are doing computer things, they tend to understand this concept a little bit better, because you have to understand statistical concepts, statistics and probability, in order to like really, really succeed in trading. Now, let's go through the basics of what that even means. Not all gamblers are being reckless, but there are a lot of gamblers in the market. And once you start to understand what kind of trader you are, it'll really help you. I never saw lasting success in my trading, and I haven't been successful that long to say it's like lasting, like it's 10 years or whatever, but it's been consistent so far. The only reason I've been able to have lasting success is because I've had a more realistic understanding of the game that I'm involved in. So you look at two different people in a casino. There's the gamblers, the degenerate gambler, and then there's the professional poker players. The professional poker players expect to make money. The professional poker players have a system to make money. The gambler, they don't really expect to make money. It's the unexpected nature of the game is what makes them keep coming back, because they don't know the answer. They're gambling for the thrill. So what's the big differentiator between a gambler and a professional poker player? What do you guys think it is in the chats? What's the difference between a gambler and a professional poker player? Do we have a code for being a CA member? Yes. If you guys are a ChartAddicts member, go to the Discord, go to the updates tab right here with the orange thing, this updates tab. And what you'll see is I'm going to pin these. Let me just do this. I'll pin this message. These are the discount codes for the general admission ticket and for the VIP and elite. If you're a ChartAddicts member, you get 50% off your tickets for the general admission, and you get 20% off the elite and the VIP tickets. Gamblers don't have a strategy, pros do. That's not necessarily true. They know when to walk. Now we're getting somewhere. Strategy and discipline, yes. Gamblers don't know when to stop, yes. So we're getting to the bottom of it. It's not about making money or losing money. This is why when traders make, if you gauge your success in trading just by whether you make money or lose money, you're never going to be consistent. Because there are days where you make money where you had nothing to do with it, right? You enter the zone and this thing just bleeds out of the sky, but you give yourself the credit. And so what happens is you start to expect that every time. When you have a more realistic understanding, I'll give you guys the real difference. A gambler doesn't understand the probability. They don't understand that if your strategy is 70% win rate, you're going to lose 3 out of every 10 trades that you take. A gambler loses 2 trades in a row and they're like, oh, they start to overthink their system, overtrade, try to make it back. A non-realistic and a very short-term focus. That's what a gambler does. A gambler always risks more than they can afford to lose. Big piece between a gambler and a trader. Gamblers always risk more than they can afford to lose. Okay? Traders, they understand probability. So let's say that we have a trade right here that we're looking to take, the short position. A gambler says, okay, well, this guy's had 3 winning days of Nasdaq. Let me just take this trade with high leverage. So a gambler is looking at the upside only. The trader is looking at what can I afford to risk in order to be in this trade. If I can't afford to risk that amount, I'm not going to take the trade. What's the chances on a scale of 0 to 100? This is how I think nowadays. What's the chances on a scale of 1 to 100 that this trade's going to be successful? There's the 50% mark, 60% mark, 70% mark, 80, 90%, and then everything below 50%. If in my mind, the chances of a trade playing out are less than 50%, I don't even look at the trade. Today, with where I stand in my trading, if the chances of winning the trade are less than 50, I don't even look at the markets. If the chances are at 60%, I might take the trade. But really, I'm looking for trades that give me a 70%, 80%, or 90% chance to win. How do I find out the probability of my strategy? By testing it. How many times does it do this when this happens? 5 times out of 10, 6 times out of 10, 7 times out of 10. And so I only take trades that have a high probability to win, not just gut feeling. Both the gambler and the professional poker player use intuition. It's like a bit of instinct that says, you know what? I don't like the way this looks. I'm going to stay out. Well, what the fuck does that mean? I don't like the way it looks. Like, put that into words. Most folks can't because it's experience. So both folks play with a little bit of intuition. The gambler doesn't know when to walk away. The gambler relies too much on their intuition and not enough on statistic. The professional always looks at numbers. You took 10 trades, you lose 3 out of every 10. So stop panicking every time you lose a trade, or 2 trades, or 3 trades. It's part of your model. It's part of your system. But if you keep your losses small, you'll survive to be able to take the trade that makes the money back. So gamblers don't know when to walk away, rely too much on intuition. No, bro, I think this is going to happen. Bro, this is how I feel, bro. This is how I feel, bro. Bro, I got a feeling, bro. Now, it's good because experienced traders have better intuition than other people. But there's nothing more dangerous than a trader that uses a mathematical system of probabilities and they have the experience to use their intuition. If you can develop both, you can be a very successful trader. Because the strategy will tell you what to do, the intuition will tell you what not to do. And those are the things that are going to save you money. Oh yeah. So I mean, the reason I try to go through these concepts on this call is because I'm trying to provide you guys something that I really, really feel like nobody else is going to say, which is really, if you guys are trading with like how most traders are gambling versus if you guys start to look at your statistics, how to really look at risk, how to ask yourself, what can I afford to lose on this trade, as opposed to asking yourself, what can I expect to gain? And if you really start to think about trading that way, the psychology, everyone's always like, oh, you have to have the psychology. Psychology is so important. You really don't have to fucking be Mahatma Gandhi to win trades. You don't have to fucking be Mother Teresa to stay in a trade, and hold the winner. What you have to do is, if you're not over leveraged, you really don't have that big of a problem staying in the trade. If you're not over leveraged, you really don't have a problem holding the drawdown or entering another position or all the shit that's going to make you money. So understanding your relationship with risk and what you can afford to risk and the capital on your account and being realistic with the capital on your account, that's, I think, when we start to have, a lot more success in trading. So for those of you guys that are new on this call, you're like, well, Roy, we've been on this call for about 40 minutes and we haven't taken a single trade. My trading style is I don't want to take every trade. I just need to catch, I don't even need to catch the perfect move. I just need to catch a piece of a move. And so for me, if I can just allow the market to play out, if I can allow a lot of retail traders to lose money at the market open, if I can be patient enough to watch people lose money, then I can notice the trend in the chart and I can just jump in after, which is what I'm doing now. I'm not going to take a trade for another 20 to 30 minutes, even if I miss the trade. A big thing that I've had to kind of wrestle with on these streams is waiting for the right entry versus missing a trade. I actually don't really care if I miss a trade. If you guys are that desperate to be in a trade, you're on the wrong stream. So for me I'm only looking for the best move that presents itself. If I don't see it, I'm very happy and comfortable being on this call and not taking a single position. Now, if you're not okay with that, if you're like very desperate to be in a trade, you got to go fuck off this call and go just gamble your account. This call is really meant for folks who are trying to like have a more rational perspective on trading, right? I know we call ourselves chart addicts, but I want to give you guys like a tip. Being a chart addict is not the goal, right? The whole company was based on, originally we were Chart Addicts Anonymous, like Alcoholics Anonymous, for people who spend too much time on the charts. If you're constantly looking for the next trade, but you don't have any success, you have to realize taking the next trade is not going to be the thing that makes you money, right? You're losing and winning and losing and winning, and you're not taking your head out of this like cycle to really look at the playing field. You're just sort of like hustle, hustle, hustle. You're never really going to make any money, right? So if you're always looking for the next trade, but you're just like in the cycle of not making money, you got to realize that there's something wrong with the way you're looking at trading. This perspective that I've adopted of trading a lot less frequently, allowing the market to play, like to develop itself, being okay with missing a trade, as long as, I only trade my edge, those sorts of things are saving me a shit ton of money in terms of losses. And I know that once I have big wins, it's just going to add up. Because I've always had big wins, but sometimes I give it back. Sometimes my over trading will sabotage my wins. Nowadays, I'm not having my wins sabotaged. I'm making money and I'm keeping that money. He said persistence without insight will result in the same outcome. Yes, you can persistently be doing something wrong. Every day you're like, I'm just going to find a trade. Every day I'm going to find a trade. If I can't find a trade, I'm going to fucking make one happen. Like some of you guys in your head are starting to like make up a reason to get in this trade. You see what I'm saying? Gamblers versus traders. A professional poker player doesn't try to fit his narrative into the hand. You know what I'm saying? If the hand is not there, if the trade is not there, if I don't see a wick to the upside and then a retest of the zone, I'm not going to sit there and be like, well, I guess this small rejection right here could be a reversal. And if you look left, this could be a sell move. And it could, and I can could myself to death. You see what I'm saying? It's forcing a trade and trying to fit your narrative onto what's happening on the chart versus allowing the trade to present itself. If I know that I'm looking for a common reversal pattern, a double top, triple top, head and shoulders, and it presents itself, I'm going to be able to recognize it. If the market hasn't presented anything worthwhile, and I start to like, well, what if, this thing breaks through? Well, what if this thing comes down and fills? And I start to play this game of forcing my own narrative onto the chart, then I'm heading back into gambling territory. You guys understand that distinction? Allowing trades to come to you versus forcing trades. And real shit, I really want to see something in the chat for that one. That's one of the biggest things to me for trading. Is trade what you see and not what you want. Major key. Just lost 100 pips on US 30 because I wasn't patient. I have the issue when I trade and make money, I tend to always give it back. It's a big thing. If you just learn to walk away with the funds, you wouldn't give it back. He says, stop preaching, get off my live stream. You guys are acting like you're being forced to be here. This is something that's always like really, really entertaining to me. Like if you want to go take your own trades and you don't want to have any sort of insight, then go take your own trades. Nobody is forcing you to be on this stream. You guys feel what I'm saying? Like, you're acting like you have to be here. If you can go take your own trades and go find your own opportunities and you don't like any sort of insight, fuck off. You see what I'm saying? If you're on this stream, it's because you appreciate some sort of insight. You appreciate another perspective. You appreciate trading with a community. And that's basically what it is. Everyone's like, oh, Roy hasn't taken a trade. Bro, if you're that desperate for a trade, fuck off. Go trade for yourself. Why are why are you waiting for somebody else? You can't be desperate for something and rely on someone else for it. You guys see what I'm trying to say? You're desperate every day. God, I got to find a trade. I got to find a trade. But you don't know how to find your own trades. Now, what are you doing? If you're on this stream, take a deep breath. And when the trade presents itself, we're going to trade. If you're like, Roy, GJ's leaving the station, bitch, buy a GJ. Why are you like trying to like sending me panic signals for me to trade GJ? Like, I got nothing to do with me. I'm waiting for my trade right here. Said, man, I love all the insight. I'm a 3-year rookie and trading alone is boring as hell. It is. It really is. That's like the biggest reason for us to have started Chart Addicts is I'm like, Omar and I realized that we weren't just here for a couple years. We weren't just like trying trading. We were going to be trading for the rest of our lives, like to the day I died. So I'm like, this is going to get fucking boring. I'm spending 6-7 hours a day. My best friends are candles. I'm listening to like, lo-fi music and charting up and shit. I'm like, no. This is not the way to go. Being able to provide value is very rewarding. Having a community to share insight with and to be like, yo, guys, I just walked out of that door. Don't walk in there. There's some shit back there. That and like being able to see someone use that information and just like kickstart their journey, save themselves a year or 2 years, it's so rewarding for me. So trading with a community has so many rewards that trading alone doesn't have. And that's really a big reason why we do these streams, why we started Chart Addicts, why we do personal coaching and all the rest. So at first glance, this looks like a great selling opportunity, but it's too early for me to tell. The momentum is still bullish. We've only had one candle, and that candle hasn't even closed yet. So until the candlestick closes, it's still just like, it's like the first confirmation. There's a slowdown in the bullish momentum, but we're still making higher highs and higher lows. So for me, it's not time to sell just yet. Yeah, DXY went crazy bullish. And my levels are like that. My levels are like that. I like the zone we're in. I like the area that we're in. If you guys are just hopping on, here's the overall picture that we're looking at, lows and highs. Lows and highs. We also have zones in between. Boom. And boom. Okay, so support, secondary support, resistance, secondary resistance. We are trading the range. Now, I do want to short here, but really, I would love to see a spike up and down, retest. That would be my favorite. That would be something I'm really looking forward to. That would be my ideal scenario. I'll trade you one back, Stefano. like I said, if we break through, then I'm just going to short at 15,000. But I'm not looking to trade against the momentum. The momentum is still bearish. I'm still looking to short. As far as I can see, we had a nice bearish drop. If we hold right here for consolidation or for just like multiple rejections, then that's going to be a great area for us to short. If I don't see a trade, if I don't see an opportunity that's convincing, I'm just not going to take a trade. It's really, really, really that simple. If you guys are watching this and you have an Instagram, you have a social media account, please make sure to tag us in your story. Just say, hey, we're on the IG or we're on the YouTube live with Chart Addicts. And if you do so, we will repost everybody that tags us in those posts. Said pro trader here, and I learned from YouTube about 6 years ago. Had my first six-figure year last year, and I couldn't stand watching these live vids and reading some of the dumbest comments. Was tilting me. Save yourself for full margin Friday, right? Never full margin. Ever, ever, ever. I don't even have US 30 on my watch list anymore. Here's what I see for SPX though. If we can't break these highs right here, price could just break down and continue selling bearish. I would very much like this 45.50 where I have a sell limit up here, and I also have a sell limit all the way back at these highs at 47.20. All right, so markets are short. We're looking for a retracement. I don't know where that retracement is going to be. It might either be halfway up or all the way back up. So I'm just basically allowing the market to retrace before I start shorting again. I'll say, well, Roy, we're sitting here watching the chart. What exactly are you waiting for? What I'm looking for is a spike up to clear all the stop losses. Because what I imagine is, I imagine myself when I first started trading, what would I do? I would have entered off this candle. I would have put my stop loss, maybe above these previous candlestick bodies, and I would have just been in this trade trying to see if it'll drop down. What used to happen to me though is I would get spiked out of my trade, and then the market would go my way. Same thing that happened yesterday. Yesterday was really aggressive though. So no matter how fat I put my stop loss, it got grabbed. Sometimes that's just that's the way that brokers and market makers like to play during news events. They like to take advantage of the retail trader. That's fine. So that what can I do to play a game where the odds are stacked against me, where they're trying to manipulate me out of my trade, is I'll basically just wait for certain cues. The cue that I'm waiting for today is a liquidity grab outside to take those stops, a close back in, and a retest. If I see this scenario, I'm shorting. That's my short scenario. What's my long scenario? My long scenario is a clear break above this candle wick right here. So if we fill this wick and then we retest above, then that's going to be a buy side scenario to take the market up. But we have to close above these candlestick highs. So for right now, I'm really just waiting for that sort of manipulation to the upside and then retest and short back down. Got that lo-fi on right now with Bloomberg on mute in the background. That's the way to go. So I want to play music on these streams, but it comes out really like muffled every time I try to play it. So it just ends up like defeating the purpose. But when I'm trading by myself, that's all I listen to. I'm listening to like lo-fi music. I'm listening to like just like chill work playlist, whatever on YouTube. When I'm going heavy, like when I'm trading and I'm going like I'm really in a trade, I'm playing some aggressive shit. I'm playing some aggressive ass rap music. I'm playing that like trap shit. I got Young Dolph on the speaker. Like it's whatever is gonna get me in the mood to be like, I don't give a fuck about this drawdown. I'll hold $10,000 in drawdown. I'll take the L. You know, whatever it is. It's just about energy, right? What are you really doing? If you're trading a casual day, you don't need that much energy. If you have too much energy and it's a casual day trading, you might want to give some energy to somebody else because you don't need it. But if it's a day where you're kind of like putting balls to the wall, it's like a personal growth day, then you know it's whatever it is that gets you in that mindset that makes you feel invincible, right? And that's how I feel like most people should start their trading days. You should start your trading day with something that makes you feel invincible, right? Whether it's working out, whether it's a certain kind of music, whether it's listening to inspirational, motivational, whether it's calling people, whether it's doing exercise, like whatever it is that makes you feel on top of your game, you are obligated to do that before you start trading every day. Or else you're not playing at the top of your game, you know? So that's the mix. That's the mix. So about 10 minutes left. This is usually when I start to look for those positions. We've already had a whipsaw to both directions. So if I can show you guys what that means. We had a wick to the downside. So a lot of folks started to short the momentum and they got trapped right here. And we also have a wick to the upside. So once I see this, there's a wick to the downside and a wick to the upside. Now I know that the market open move has already presented itself and it's time for the real direction to start showing because we've already done, you know, kind of like the biggest move. So now what I'm looking for is to see if we can consolidate here or just create a multiple rejection kind of scenario, like huge spike, come back down and retest. Or if we end up just coming down to fill this wick. And then we can look for a short at one of these London session highs. Okay. The zones are already there. We just got to wait for the market to give us an entry. Would you move your trend line or keep it in the same place? It's been getting respected, if I'll be completely honest. So I don't know. I don't see why I would change it. I see 1, 2, all these touches here. Now I understand there was a fake out, but that happens in the markets. Even when the market faked below it, it still retested on the outside. And then even when the market disrespected it, it still retested it for an entry. So if the market does like, if I'm shorting it, the first place I'm going to take profits is the trend line. Because I know if the market's going to launch, it's probably going to be from here. So if I do short up here, the first take profit level is going to be here. The second take profit level will be this red zone, and then this blue zone, and then the bottom of the blue zone. So I have all of my targets already predetermined. Now, if I had woken up and this trend line hadn't got respected at all, I would delete it. I would adjust it and I would make sure that it's more, I use something a little bit more accurate. what I'm starting to like a lot more would be an entry up here. Just because the risk and reward is a lot more attractive. Give me 1 second, y'all. I'll be right back. Give me 1 second. So I know the chart was really messy before. This is literally what I'm looking at when I look at that old messy chart. It's basically just these levels that I'm watching. This strategy, and if you guys have seen any of my videos or you guys have like studied my strategy specifically, you understand what I'm doing here in terms of primary and secondary support and primary and secondary resistance. It is a major key for a lot of you guys if you're struggling with your trading, is just to learn a very simple way of analyzing any market. And this to me is just one of the easiest ways that I've ever found to analyze markets. The second piece is over leveraging is the reason 90% of you are still losing. Let's just have an honest conversation this morning, right? As soon as you sort of give that up, as soon as you guys like, the reason people ask, Roy, why does it take so long for people to succeed in trading? Roy, why did it take you 2 years to start winning in trading? Because that's about how long it takes for the market to kick your ass enough for you to stop trying to cheat the system. Because you over leveraged. Eventually, if you touch the hot stove enough, you're going to realize I'm not doing that again. If you guys want to save yourself a lot of time in your trading, if you guys want to save yourself a lot of headache in your trading, what I would do is I would make sure to get your leverage in check as soon as possible. If you do that, your chances of winning are going to go up by 50 to 70%. Most reason that people are losing is because they can't stay in the trade because they went in too big. They're, they lost the trade, so they over leveraged trying to make it back, and now they're in even deeper. They won a bunch of trades, but then they started to over leverage because they got excited, and that one loss ate up all the wins. However, over trading or over leveraging expresses itself in your habits, it's going to eat up your wins. Everyone here is capable of making money in trading. Everyone here is capable of making money trading. Who's capable of keeping it? Who's capable of walking away with the funds? Who's capable of doing it consistently because they have a system that they use as opposed to just only trusting their intuition? That's what's going to make you successful. If you have not found success yet, get these factors under control. If you refuse to get these factors under control, you're going to be on this cycle for a long time. See, I don't like Roy's streams. I like the 10 pip traders instead. And not like I genuine to God, not understand why folks who live stream go for like 10 pip trades or whatever. Because it's really easy to just like get on here and be like, all right, guys, let's just take this 10 pip trade. The risk and reward is all fucked up, but don't even worry about that. Let's just take this trade. Everyone takes a trade. Somebody's up 7 pips. They're like, yo, we made 7 pips. They're just going crazy and foaming at the mouth on social media. Like, I guess we could do a stream like that, but like, what the fuck would be the point of that? I want to show you guys real trading. Real trading is I might waste 2 hours in a day. I might sit on the chart for 2 hours, right? I have my phone in my hand. I'm listening to music. I might be doing something else, listening to a podcast, but I'm just waiting for a trade that might never come. And if it doesn't come, guess what I do nowadays? I don't trade. Some of you guys are like, well, I just wasted 2 hours on the chart. I'm going to go find goddamn anything to trade. So don't force trades. Allow the trades to set themselves up instead of looking for a trade. Don't over leverage. Have a trading plan and journal your results. You were saying something about when the market keeps taking out a break even or a profit. You were saying that when I got in because I'm facing something like that now. I'm kind of confused what you're even asking, family. You said 14,550, we taken the market down. Yeah. Did 80% of all live streams on YouTube go for 10 pips? Guys, it's because it's like, fuck, man. Look, I'll be real with you guys. If I was that, like, I can trade any time frame. Any time frame. If we really wanted to catch small scalps, I can go back to the old days. I can go back to the old days where we just basically mark off the pre-session consolidation. We could trade the break and retest at the market open, or we could trade the break back in, right? Mark off the highs and lows. Y'all stop fucking playing with me. I know these markets like the back of my hand. We could trade the break back in, retest, and short down, right? If I really wanted to get on my scalp, like real scalp shit. But what's the best opportunity that we have is these higher time frame levels. This is the most simple chart that I could possibly present anybody. Ain't shit else that's going to happen. We either finna drop from here, or we're going to drop from here, or we're going to break through. Those are the only three options that I can see. Isn't that crazy how that works? Now, when you have three options, do you know which one is going to be like the one? No, we don't always know. But that's why we keep our options open, and I stay in the right mindset so I can be flexible regardless of what the market does. I like 15 flat more than 15,550. And I like 15,600 more than 15,550. So my biggest reason that I haven't entered a trade yet, I understand that there's volume is slowing down. That's the first sign for me. But while we're still creating higher lows and higher highs, I don't want to just immediately short in the market. So what I'm really looking to do is see a change in the momentum. Right now, the momentum is still bullish, but we're getting the first sign of a slowdown. That's the story that these candlesticks are telling me. Now that bullish volume is slowing down, I have to wait to see if sellers are going to get invited into the market, because buyers can slow down while they pick up gas and then keep going. So I need both sides of the coin. I need to see the buyers slow down, and then I need to see the sellers step in. Once I see the sellers step in, then I just look for a retest, and I can trade the market in the direction of who has control. Podcast with Richard Olson, founder of Oanda, drops this weekend. Arguably the most not arguably, hands down, the most insightful conversation we've ever had on the Chart Addicts podcast, hands down. This guy talks about everything from back end, how brokers take advantage of us during news, what brokers do in order to make money on the side, like increasing the spreads and manipulating the spreads and stop hunts and all this stuff. This guy founded Oanda. Let's just go ahead and put it that way. He's seen millions and millions of order flow data from traders and retail traders. He knows the habits of traders. He knows, he built the fucking engineering system for it. He knows it. So I'm really looking forward to dropping that. I hope you guys are excited for that conversation as much as I am. So it's almost 10:30. Normally we would get off right at 10:30. What I'm going to do for you guys is I'm going to stay on until we can find this opportunity, because I want to show you guys what these opportunities look like when they present themselves on the chart and how we can take advantage. The GJ shorts were very successful. We finally finished. Well, I want to say finished the move, but we've basically liquidated the majority of the move. Did I want the market to come down to 152.4 where I have a buy limit? Yes. Did the market miss my buy limit? Yes. Is that frustrating? Yes. Do I hope the market comes back for my entry? Please, right? I've been waiting for this for so many weeks. We were shorting on the way down based on the higher time frame, the weekly double top. The market created another minor double top here on the daily, break, retest, and then drop. And then we even retested the trend line right here, the neckline. That's where I ended up taking my next short position. The real move for me, though, is it's a bullish market. So I'm looking for a retracement down to 152.4 or all the way down to 149.5, these weekly lows, for us to take the market to 160. So GJ is a holder. We just have to find a good opportunity to get in and hold those trades for the long term. Let's look at gold real quick.
I just shorted gold.
Yep, gold broke out of that daily trend line. It just came back to retest. It's the same level I was looking at with Joseph this morning.
Yeah, I was just gonna say that trend line and the break. 1805 is my sell just now.
Damn, I had a sell limit at 815 or 1815. But this is clear. This is clear as day.
Very clear. I just shorted.
Beautiful. So TP1 is 1792.
Yeah, exactly. That's my TP1.
1784 TP2.
Yep. And then we have a potential. This thing looks like it's bears are in control here. So
for sure. I mean, you see this larger time frame trend line I have, kind of just like hanging out down here. This is based on higher time frame touches weekly.
Bro, you know what's crazy is that I look at patterns, right? And if you look at the monthly, what the monthly is doing is the same thing that's doing back in 2012. And that's interesting to see. So it might break that trend line. If it didn't already break, it might break that trend line. That's crazy.
I mean, we're definitely cooking up right here, but the way I see this is like, this is just a flag retracement, because you see all the support that got formed here?
Yeah, that's a nice structure right there. So
you feel what I'm saying? So in my mind, this was, and it kind of looks like Bitcoin. This is what's crazy. It's got this.
Yeah.
Whole flag. So if anything, we hit this high again. If it wants to drop, it can drop. If it wants to keep going, it'll keep going.
Yeah, but you're right. We're cooking up something right there. So it's just like prices are pretty much ranging in the same area. So we'll see what happens. I have shorts at 1852, by the way.
Dude, I still have my sell limit at 44 that never got hit.
Dude, I'm holding my short. So, but yeah, I think bears are in control in this market for now.
For sure. All right, let me keep my eye on Nasdaq real quick. I think we're getting ready to cook up a short position here soon. Sellers are definitely stepping in. So that's a really good sign for me. So what I want to see is a closure below these previous candlestick body, and then we can just catch the retest and drop. I realized something really important, guys. I know that we always post wicks, and as much as I love the perfect wick entries, every time I talk to Ted, he only tells me one thing. This is I'm talking about Uncle Ted from Instagram. He says you're not trying to be perfect. Your goal is not to be perfect. Your goal is to catch a percentage of the overall move. Because if there's a move that gets 1,000 pips and you catch half of it, you still caught 500 pips. So you don't have to get the wick entry and milk the whole thing. What you have to do is catch a percentage of the moves that will ultimately happen. So some of you guys are like, well, I never caught the wick entry up here. Like catching from here to here, a percentage of this overall move is all you need to make money. And this has been a huge shift in my psychology between like, okay, let me just enter because I want to get the pinpoint entry versus let the market drop to confirm that sellers are here and then just let me catch a retest. Because once they've confirmed the direction, like it's a lot more likely for me to win this trade. I'm already trading in the right direction of the market. So it's been a huge shift for me. I'm not really trying to find perfect entries as much as I'm trying to get a high probability directional setup. And if I can do that, then I'm just going to make money by default by being on the right side of the market. Beautiful rejection off the 71. And so the entry that I'd be looking for is the next fib level, which is the 61% or this 14,400. So go back down to the smaller time frame. And that would have been a wick entry. But we go down to the smaller time frame. If we close bearish, that's a great sign. Then I wait for a retracement, either to 14,350 or 14,400, and then short it down to 1,400 flat.
So you wait for the retest or to enter manually or set the limit? Usually what I do, once I see my bias has been confirmed, just like now, your bias I think is being confirmed by that candle. And if that candle closes like that, then definitely you see bears incoming. Now that's when I do my sell limit. I'm like, okay, so find me a quarter point around the area that I want to sell, and then I just do a sell limit. Do you
So
do that?
that's the same mindset that I have, but I'm doing it manually because I want to see the candlesticks form instead. For me, I don't know if it's going to be the 61 or it's going to come all the way up to this key level. The key level is like probably 50 points higher. So what I do is it comes up here and then it starts to push up a little bit more. And so instead of just entering right here, I'll wait for it and then I'll enter here to save myself probably 20 or 30 points. Now I know it's a little bit more like, that's just more preference, you know?
Right.
But it's the same price. Like if I was to take it would still look like this regardless.
Right, it's around that zone, right? That's what you. The joint dropping, boy. 30-minute candle is closed. 15-minute candle is closed.
Check my heart rate, bro. Check my heart rate. Hold on. No. Hold on. Let me show y'all what cool, calm, and collected looks like. We're tracking my shit now.
I have to be calm as shit, bro.
I'm waiting for this thing. Hold on. That's my resting rate right now.
Oh,
we
damn.
Chilling. We at 90 right now. We chilling. I'm
good.
chilling. I don't give a fuck.
That's good.
And plus, I love this thing. If you're a trader and you just want to check your physical metrics while you're trading, this thing is dope. It's like before I enter the trade, what's my heart rate? While I'm in the trade, what's my heart rate? When I'm getting out, what's my heart rate? If it stays flat, I'm getting somewhere.
Okay, that's actually really good. That's really important for trading. You know what I'm saying? Because I noticed in the past when you start trading, you are in a trade and your heart rate is going up, 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 and it's just like you get nervous or something, right?
For
So
sure.
you start realizing when you're not nervous anymore is when you actually, you become a better trader, I guess, or
100%.
you know.
Yo, so it looks like the price is going to reject this minor level here and just keep dropping. It's a little bit too low for me to sell. So it's the same exact thing. If the market does drop through here, then I'll wait for a retracement of this level for a short. I never trade the momentum anymore because specifically on the indices, I've just gotten burned so many times where we try to short right now and we get caught in a retracement. So really it's like, okay, if the market is closing below this resistance, that's cool. Let it close. Then I wait for a retracement back to that key zone. I really, I really want to short from here, but I'd much rather see this retracement back up to 350.
Then you should wait for it.
Yeah, but if you look left, Stefano, like smaller time frame stuff, you see this sell zone here.
Mm.
This is a Wyckoff range,
Yep.
and so if we're retesting right now, this could be our only opportunity. It might not come back for a retest, so that's the risk. But
Mm.
like I said before, I'm perfectly okay missing the move. I'm not trying to be in a trade. I'm only trying to take a trade that just makes absolute sense. So that's why I'm okay with missing it, and I'm okay with knowing that this thing is going to end up at the floor, and if I wait for a retest too long.
Both short 60 pips in profit.
Oh yeah, she's dropping. She's dropping. Like I want to enter a baby position, a baby position right now, and then get the rest on the retest. But patience pays. Patience pays. Who's ever gotten in a trade in the chat? Who's ever gotten in a trade? I really want to see the answers for this. Who's ever gotten in a trade? It really looked like it was about to bleed. It looked like it was about to drop. You're like, no, I just got to get in the sell. And then it starts to retrace on you. And it's retracing. And you're like, dude, screw this. I'm getting out. And you jump out and you check the charts back later and it ended up playing in your favor. Who has ever had that situation happen to them? Let me know in the chat.
It happened to me yesterday on gold.
It happens all the time. And so that's why for me, what I started to realize is the fear of missing a trade is an imaginary fear because missing a trade doesn't exist. It's not your fucking trade to miss or not miss anyways. You don't own the market. Losing money, however, that's very real. Those are your funds, that's your capital, and you are actually losing the money. So I will always take missing a trade over risking money unnecessarily because missing a trade is a psychological imaginary scenario. Losing money is very fucking real. You literally had money and now it's gone. You understand? But people tend to conflate both of those fears as having the same weight. They say missing the trade and losing money feel the same to me. Honestly, Roy, missing the trade is worse than losing money. So I'd rather risk it. Y'all got trading all kinds of fucked up. Protecting your capital is more important than catching a move. And until you guys figure that out, you'll always be on a boom and bust cycle because you don't have respect for the capital. All right, I'm going to enter a small position here, people. I'm going to enter a small short position here. My stop loss is going to be above this previous candlestick, so 375. And I'm not going to put a full position. So whereas I put a standard normally, what I'm only going to do is I'm going to start to scale into this trade. So I might do a quarter of my position or less right now. If the market drops, comes back to retest, I'll enter another quarter of my position. As it drops and retest, I'll enter another quarter of my position. And that's how I'm looking to scale my trade. In the chat says always, all the time, me, happened to me yesterday. So I'm telling you guys, as soon as you start to realize that the fear of missing out, the fear of missing a trade, oh my God, it's going to move without me. That's not real. There's so many trades that you are not involved in. There's so many opportunities that you have nothing to do with. So you can't sit there and be like the market owes you something, or the market is trying to like take something from you if you miss a trade. You guys see what I'm saying? Now I'm up 200 pips on this short. Just going to be real. It's kind of fluctuating between 100 and 200 pips. Just kind of keeps playing up and down. A nice retracement back up is still the best case scenario here. A retracement back up to the 61.8 would be good, or somebody just cuts the cord and this thing falls to the ground. Two options.
I just booked my gold shorts, by the way, if anyone want to know.
He said 112 pip on gold. Good stuff.
Let's go.
That's what I like to see. That's what I like to see. If y'all closing blues, man, if y'all closing blues, you're making money on this call.
And that thing might reverse on me right now, so I just booked.
You booked the whole position?
I booked partials, 90% of that position though.
Yeah, it's possible. It's at a huge buy zone right now. But if it breaks that, it's a good another 50 pips.
Mm-hmm.
That's a good trade, though. It's a really, really, really good trade. Yeah, that 4 hour, bro. That 4 hour looks like it's got some room.
I'm favoring buys around 1790 per gold.
Oh, yeah. That was our target for the bigger time frame.
Yeah, I took sells at like 1810, and then
real quick, who took shorts on Nasdaq?
Beautiful. Beautiful.
How many pips do you think this is? Take a guess.
It's like 400 pips.
830.
That's Nas, bro. That's Nas. That's what
Nasty
you love.
Nas, baby. Alrighty. So even with a 0.01, I'm sitting at. Well, let me close this partials. $48. So that's 480 pips, 540 pips. All right, ladies and gentlemen. I did my job. That was the 500 pips for the day. I closed partial profits. I'm holding a runner. So I'm going to allow the runner to keep playing. If the market comes back to retest later, I can enter the rest of my positions. But for now, 500, 600 pips, whatever you guys caught on this trade, congratulations. You can close in blue and consider this a successful day. Now, the patience in this is waiting for the retracement and then waiting for it to drop and waiting for the next retracement. And that's why, like, really just having a longer term perspective is good with Nasdaq. But if you guys are like floating 300, 400, 500 pips right now and you closed it, you're ending the day in a shit ton of profit. So keep that in mind. If you guys are making money, take those blues and walk away. Where did you drop the code for the FX Summit? I have to buy them ASAP. They're in the updates. They're in the updates channel in the Discord. Go to the updates with this orange tab right here. And I pinned both of these to the channel. So you can go and look for the discount code, scroll up a little bit, or just go to the pinned messages right here. He said I took baby shorts, me, yada da. I mean, guys, even with a small lot size, it's still a significant amount of pips. You know, like 600 pips is significant no matter what you're using.
Bro, don't get me wrong. I would be thinking about buying gold at this point, but yeah, I already made my money. So I'll wait for tomorrow. If I see them buys, I see them buys. But yeah.
I mean, that's the thing about being like a more advanced trader is the risk management says that, okay, let me just walk away now. But the, what's it called? The skill set says I still see opportunity on the chart.
Mm-hmm.
And so as long as you still see technical opportunity, there's a chance for you to make money. My biggest thing is I would rather miss a move and just walk away in blue these days.
That's true.
Because I've been burned so many times. Like I know that I can make money, but keeping it has always been my issue. And so as long as I can keep it, that's what I pride myself on these days. I don't care about catching every move, you know?
True. Yeah. Take notes, people. Take notes. This is it. The GOAT himself talking, bro. Thank you very much, bro. I appreciate your insight, bro. I always learn from you, brother.
My guy, right back at you. Right back at you. But everybody, if you have to hop off, if you got to go get about your day, it was great to see everybody. We made money. I'm going to be holding this trade. I'm going to be going, you know, monitoring this and sending out new markups for the ChartAddicts team. You guys know exactly what I'm looking at. If you guys want to watch this recording, it will be posted right after this. Great to see everybody on this call. Happy and safe trading. Take it easy.